Hey, Bulls and Bears. My name is JJ. You're watching Bull, Boom, Bear, Bust. We're back with another dose of economic reality. Today is February, no, I'm sorry. It is March 3rd, 2023. Let's get into it. You may notice I'm on a different camera today. So, long story short, then we'll get into the news. I started off with a very old camera, upgraded to a better camera, which I thought was this one. People still complain that it wasn't very good. So then I got this better camera, but this was a PC camera or a USB camera. People complained that that was even worse than this one. So now I'm back to this one. So I don't know how clear you guys want the picture to be. I mean, I thought this was clear enough when I went and watched the video, but apparently you guys want to see every line on my face. I guess it's not clear enough. You want to see all my wrinkles and everything, right? So, all right, let's get into it. So we've got a lot of news to cover. Here is something that's not going to surprise many people here. The Fed announces ongoing interest rate hikes are needed, right? So first it was the last couple months was, oh, we may slow down the rate hikes because inflation's becoming more controlled, or inflation is slowing, as they like to call it. But now they're changing their tune. But see, we warned you. We knew, I think all of us here knew that inflation wasn't going to go away. Why? Because production, we're not increasing production in so many of the things that we need. Look at food prices. Are we increasing production? No. Look at automobiles. Are we increasing production? No. In fact, we're doing more outsourcing. Now, outsourcing, that gets into a pretty detailed topic there. But let's talk about that, because I mentioned a few reports ago, I mentioned that I bought this juice, and I was talking about how the juice was actually a product of Turkey, how we have to import this juice. It's like $4 a bottle. But then I made the remark, well, what if we could grow the food necessary for this juice? It was like green juice, right? Kale, cucumber, spinach, etc. I said, what if we could produce that here in the United States? Wouldn't it be cheaper? And somebody said, well, no, it probably would be more expensive, because the cost of producing things here in the US is pretty expensive, even more expensive than shipping things overseas from lower cost production countries. Uh, that is true. But if we didn't have the high cost of living, if we didn't have the inflation here, then we wouldn't have to have high wages, right? So it's all connected. So higher cost of living equals the need for higher wages. So if we can fix this inflation, the high cost of living, people wouldn't need to be paid such high wages, right? So that was my point in that video, that we wouldn't need high wages, and it would be cheaper to produce things here in the United States. So a low cost of living equals less of a need to outsource to lower cost countries. All right, that's the point I was trying to make in that video. But let's get into it. So the Fed, they are acknowledging here that inflation is here to stay. They didn't say those exact words, but they're acknowledging that they may need to keep rates higher for longer. This is out of Reuters. Fed acutely aware of trouble inflation is causing. Isn't it interesting that these people make millions of dollars? They get paid millions of dollars for what they do. Also, on top of that, you have the trading situation where they're allowed to trade stocks based off of insider information, but that's another story. That gets into the SEC and how the SEC looks at some people and not others. If you and I did something like they were doing, this type of trading on insider knowledge, we would be locked up. But again, that's another story. I don't want to get into that, because that's if I start talking about some of those things here, I might end up in a straitjacket, and that's not going to be fun for anybody. HP earnings. Sales decline driven by the macro economy. We talked about HP a few reports ago, about the layoffs, how the big drop in sales of HP items. During the health crisis and the work at home craze, so many computer companies, chip companies, tech companies saw a surge in demand for their products and for their services, Zoom meetings, camcorders, computers, etc. Now the reverse is happening, but it's not just happening getting back to where we were pre-pandemic. It's actually worse than we were in 2020, right? So it's not just because we had a boom in these things and now they're being reversed. It's actually worse than what it was prior to the takeoff, prior to the boom. Do you understand? But HP, in response to talks of layoffs and more layoffs, they said that this is driven by the macro economy. And it's true. I mean, we look around the globe, we see debt on top of debt on top of debt, nations in debt. Um, so for people, again, thinking that, and I have to remind people of this every few weeks at least, because some people don't watch every report. So I want to make sure that this is not missed because this is important. Thinking that you can just go ahead and fix this by changing the administration, you may tweak a few things here and there. There may be some policies that are different between one administration to the next administration, but the big picture, the overall structure, the monetary system, the economy is not going to change. It's all debt driven. It's a debt driven economy. It's a debt based economy with continuous debt is needed to sustain the illusion of economic growth. And when consumers get loaded up with debt, like right now, you're going to see major shifts in the economy. It doesn't matter which administration is in office, left, right, blue, red. It doesn't matter, right? It's all about the debt and the illusion of a growing economy by people going out, spending money they don't have, borrowing money. So now you need to forgive debt in certain areas to continue the illusion of economic growth, right? You also need to help people out more with their expenses. And what do we have now? We have this national rental assistance program that's going to be coming out. It's being discussed right now, but I think it's going to come out because there's no fixing the affordability problem in housing, right? People are just not earning enough. And when you have expenses, landlords are always going to raise their rents. A lot of it's greed. Of course, there's always greed, but also the cost of living. When the cost of living goes up, it goes up for everybody, including landlords. They're going to raise their rents to make up for that. The cost of repairs, the cost of renovating homes, you name it, the cost of insurance, everything's going up. So that's the problem with this environment that we have here, where we're always gauging economic growth on rising prices and spending, right? So it's completely ridiculous that that's how they do it, but that's how they do it. So let's figure out how we can take advantage of this situation. We're going to talk about that here in just a few minutes, but I've got some other news to get into first. Bankruptcy filings in the U.S. surged the fastest pace since 2009, and these are large bankruptcies, and we know that there's a big issue right now with vacancies at a lot of these commercial real estate buildings. In fact, we just reported last episode that Blackstone has defaulted on a bond payment, and there's just surging vacancies at a lot of these commercial buildings. And this is another indicator that things are not headed in a very good direction for the economy. And we're going to continue to see fallout, more layoffs combined with rising prices, or if not rising, at least staying elevated, right? So when they report the inflation numbers, it's all about, oh, inflation is slowing down. The increase in the cost of living is slowing down. That's a good thing. Anytime it's increasing at all, it's not a good thing. But the problem is there's a 2% inflation target. So even if they hit their target, it's still not a good thing. It's a high cost of living. So how could we take advantage of this? Well, we got to know the areas of inflation and the areas of deflation, right? Real estate, deflation. Automobiles, deflation. The better investment of the two, obviously real estate. It's passive income. If you accumulate another property, you can rent one out. If you have more than one, that's passive income. The problem is you need to buy at the right time and make sure that your income is going to exceed your outflows for the property, right? Cash flow. So there's tremendous buying opportunities ahead here for the deflation that we're going to see in the real estate market. I happen to be in San Diego, way overinflated. We've got a long ways to go before I'll be investing in real estate here, but I do have my powder dry and I'm ready for that. The other area, inflation. Invest for inflation. My number one still is silver, and I think everyone should have some silver in their portfolio. I think it's going to be in the thousands of dollars per ounce at some point because the monetary system's changing. For those that haven't heard, the dollar is not going to be the reserve currency forever, and we're starting to see it fall apart right now. It's a very slow process. De-dollarization is happening. You may see dollar strength and you may see drops and ups and downs in the dollar, but ultimately the dollar is going the way of the dinosaur, and there's going to be something replacing it. Now, a lot of people have speculated it's going to be this, it's going to be that. Some people say digital currency, all digital, central bank digital currency. Other people say no, it's going to be gold backed because they see some other countries now integrating precious metals into their trades, into their monetary system, etc. So it's very wild times right now, right? A lot of things happening, a lot of things to think about. But those are my strategies here for investing both ways, right? The long term play of the monetary system and the short term investment when you see deflation, buy when everyone else is scared, right? So that's why it's still important to have some cash, even though the dollar is going away. It's not going away tomorrow. It's not going away next week or next month. It's still going to be here for a while. So you'll still need dollars. Other than that, let's get into a little bit more news here. Rich Dad author Robert Kiyosaki, let's talk about him. Robert Kiyosaki warns global economy on the verge of collapse. Now, you may hear that and you say, oh, Kiyosaki's been saying that for years. Maybe one day he'll be right. No, he's right. This is the beginning of the collapse, right? There's no stopping this collapse. And I think you're going to see a lot of wild things transpire here in 2023. There's going to be a lot of distractions, but typically when you see economic collapse, you see wars escalate, you see disasters escalate, and I'll just have to leave it at that. But get ready for some wild things to happen here in 2023. I still expect blackouts, bank runs, system failures, and hacks where systems go down, from anything from airports to the banking system to hotels, you name it. We're going to see some turbulence. And the bottom line would be buckle up, because we're going to see a turbulent 2023. Everybody, thanks for watching. We're going to wrap this up here. Keep stacking. Talk to you very soon. Please like, subscribe if you like what we talk about. Bye for now. Big love. Keep stacking. Peace.